Ladies and gentlemen, welcome after a short break, and we are connecting with Davide Biocchi, a professional trader for Directa. Welcome.
Well, very pleased to be here again, and really happy to be in front of your public, your audience. So, thank you for calling.
I'm glad we connected as well. So, Davide, let me remind our viewers about yesterday's event. US and China signed what they billed as the first phase of a broader trade deal. May you please tell us what happened afterwards? What was the market reaction?
Yes, the market reacted well. I mean, the market already know that we are going to sign this final agreement. And in the previous days, the market went up really a lot to celebrate this moment. To be honest, yesterday the market was quite flat in the US, and maybe the European stocks today are not performing so good as maybe people can expect. But this is the classic situation in the market when we can say that we can see the sell on news. I mean, when we speak about the sell on news, okay, this is something very clear. So when the event comes to the top, let me say, when the news is released officially, it's quite normal that someone can take profit from the position. So this is something that we will see in the incoming days. What kind of clear reaction the market will have, especially going through this reporting season that we have in US, because the guidance of the companies listed in the market will have a quite important impact in the possibility for the market to go for some new maximum again through a year.
Exactly. You have mentioned a very important matter, and I would like to ask you further about S&P 500 because this index created a new record high during yesterday's session. The area of 3,300 points is right now being tested right now. In your experience, is it a good moment to join the trend?
Well, to be honest, maybe I will have a chart very soon, so I can show you something that can be really interesting. If we consider what happened through the years to the market, what we can say is that the market remained really for quite a long time around the 3,000 points of S&P 500. What is this meaning? This is meaning that these prices, so prices of stocks around this level of index, are the prices that are fixed, let me say, that are really clear in the mind of the investors. So if the market, like it is happening, let me say, in the last period, is growing up quite soon, as it happens, what can happen is that we need the market and the prices to consolidate, because we need all the investors to get more familiar to some different price than some months ago, where they remained for such a long time, okay? So in this case, the more we see some period of time in which the market, let me say, consolidated the prices, like the one I'm putting the arrow here, okay? This is very important. But otherwise, if the price will move so fast, in case of something wrong, okay, the price will be back down, probably exactly to the same level where the market did the more important consolidation. So in a certain way, people can get in the trend, but the stop loss is quite far, because only under 3,000 points of S&P 500, we will see something like a trend inversion in the market. Otherwise, it's only a temporary, let me say, weak period, but is maybe a good opportunity for buyers, or maybe buyers can buy also new maximum, and we have every day this possibility in the UX.
So are you saying that it is wiser to wait and see wait for the round psychological number of 3,000 points in terms of S&P 500 trading?
Well, we have no possibility to know if the market will come back again to this level. We don't have a possibility to know if it will happen soon. So the idea is that with such a strong market like the one we have, if you think that it can continue, you can buy. Maybe you can wait for the end of the reporting season, the most, let me say, important stocks, more or less. And on the other side, maybe you can, let me say, plan some protections that you can activate in case of something can go wrong. For example, you can sell your stocks if you have the possibility to plan a stop loss, or you can cover your position buying volatility or shorting the index. It depends from the kind of which kind of exposure you have to the market and which kind of strategy. But for sure, these are the best moments to buy. And this is the moment in which being a trader or an investor is more and more difficult, because especially if you exit the market and then the price continue raising, that is very difficult to buy prices higher than the one you sold. This is really complicated. I mean, from the emotional side, and we know that emotions has a big impact in the success of traders. And that's why sometimes traders are missing the best moment in the market.
And let's discuss this topic for a moment. How, because you are a professional trader, how do you cope with such moments in your trading life?
Oh yeah, for sure. And that's why I can tell people about it. You know, imagine that if you are like me, a trader from since more than 20 years. So it's something that you for sure went through every kind of experience. You experienced both the possibility to gain money and to lose money. So this is really something that is, let me say, helping you creating what we call experience, but at the end is the sum of profits and loss that you have through your trading life, okay? So this is quite important. I saw through the past that the most of the time when the market offers you the best possibility to gain money, this is something that in the very beginning people do not appreciate, because the market starts raising, but you do not understand very well. If you look around you, the situation is not something like, but I think the market is wrong, and you wait, you lose the proper market timing sometimes. And especially the more difficult thing is to buy if the market is continuing to grow up and you already sold before. So you sell the market because you think the prices will go down, okay? But in case it will not happen and the price continue raising, you must have, let me say, the solid power to buy again. This is very important if you want to be a successful investor or trader.
Well, this is definitely the case of S&P 500. But on the other hand, buying or selling American stocks need only one thing, and this is US dollar. So can you comment current situation on USD? Are you more bullish or rather skewed to the short side?
Well, if we consider the currency pair of euro against the dollar, it's something really quite strange, because in the past we have seen on this market that we had a very big volatility. This is a chart going back only some years, but if we go back more, the more we go back, the more we see volatility. So imagine that this was a market able to go up and down so many figures per year, okay? But starting from the half of 2018, this market went more flat and then flat and more flat. And now this is a very flat market. So in the last couple of years, the market was in a gentle downtrend that we can have in a channel like the one I'm drawing here. So the market went down a little bit, gently, as I told, within let me say inside this channel, okay, and especially in the last period, and we tried recently to overtake, to break this channel, but it was the test of 1.12, but it was a failure. And if we go in details connected to, let me say, the last period, we can see that the market is very choppy recently, and the levels that the market is choppy in are this one. So something like this one, okay, and this. So the market is up and down these levels, more or less, okay. There was a trial here when the market tried to overtake, let me say, the downtrend line that we drew before. So overtaking 1.12 could be important, but the market was not able to do that. So we have the market here around this level, and we can expect that, let me say, the situation will change only in case of prices higher than 1.12 or less than 1.10. Okay, so these are more or less the top, let me say, and let me say, and the low of this. This is something that we can call a box. The market is in a volatility in this kind of market.
Okay, Davide, it seems we just experienced some internet problems. So let me get back. Let me go back to the beginning of our talk and ask you about gold, because this precious metal is being traded by you. I think you will agree with me. You would actually agree with me if I would tell that you like gold, right? This precious metal is still kind of muted after first days of 2020. It is right now being traded around $1,550 per ounce level. So what next? Are you still kind of bullish versus gold, or you rather would like to wait and see what will happen?
Okay, as you can see, this is quite normal for the gold. Let me say, to stay for a long period in a situation like this, and then a break like this. Then again, a flag here and a break, and then again, a very long flag here, and then a break again. So this is part of a story of a gold, okay? And recently, the gold was really bought and was very interesting for the also for trading purposes. But at the end, what we have seen recently is that the price went really up, breaking the previous maximum that was around this price, 1,550, and was able to arrive also very close to even a little bit over 1,600. So the price then came back, and it seems that the pullback was more or less around 1,520. So I expect the market to have a reaction here, if it will continue like that, and maybe to retest again. Or, let me say, I will be worried only in case the market will go down and will go under the support of 1,520. In that case, the target will be again 1,480. That is this kind of level. Okay?
Mm-hmm. Davide, thank you very much for your input. Unfortunately, we do not have more time. And so, once again, thank you very much for your comments.
And okay, good to you, and see you soon next week.
Exactly. See you soon. I wish you very pleasant day, very pleasant Friday, and most importantly, very pleasant weekend, right? So, see you next week.
Ciao, ciao from Italy.
Bye. Thank you.